How to break free from investment inertia. Investment inertia is a tendency to actually do nothing about your investments and is far more common than what you may believe. This could be coming from various places. For example, it could just be a really busy lifestyle. Many of us lead very busy lifestyles and have no time outside of our professional, family, and personal interest commitments. As a result of that, one area that definitely suffers is our investment plan and our financial plan. Number two, very often, is our attachment or emotional connect to legacy investments. Very often, you could be inheriting certain assets. It could be a piece of real estate, some fixed deposits, some stocks, and you could always find that the willingness to sell some of that, because there may be memories, some of them very pleasant associated with that, actually prevent you from making changes which may be warranted. Number three could be the amount of capital gains tax that you might have to pay. Very often, investments, especially when they do well, can come with large amounts of capital gain and as a result, large amounts of taxes. This excellent performance of the portfolio could actually come in the way of you actually rebalancing the portfolio because you're fearful of paying extra capital gains tax. And often then regretting because maybe the markets go up even after you exit. The challenge with investment inertia often results in portfolio underperformance over long periods of time, which is much harder to measure because you may be looking only at absolute returns without looking at what an alternative investment could have delivered over the same time frame. So some of the things that tend to happen because of this inertia or the pitfalls emerging from there could be that your investments, besides underperforming, could actually not be aligned to your financial goals and life events that are happening for you. For example, if you have an event like a retirement coming up, or you have a sale of a business or a piece of real estate, or just some other very important event that requires capital, or may give you capital, like sale of a business, you want to ensure that the way that you act on it is aligned with your long-term financial needs. Retirement is a great place where there is a tendency for investment portfolios to either be too safe or too aggressive because investors have inertia to make changes. The second impact of all of this could be that you have an estate plan which is not updated. Very often, you could have life events happening, maybe a marriage, maybe a divorce, maybe a birth of someone, maybe someone passing away. All of these things do tend to have implications on your financial plan and investment strategy. An investment inertia could mean that you essentially are failing to update many important documents which support this. For example, your wills, your trusts. Just maybe an investment strategy doesn't get updated because there is inertia in terms of dealing with it. The other thing that could happen is liquidity could be compromised. It's quite common for many of these assets, like for example, private equity or real estate, to be rather illiquid. And therefore, what might happen is you may be very asset rich, but maybe income poor. And because you have investment inertia, the lack of willingness to make some of these changes, you might be living a lifestyle which is far below what you can actually afford and worrying about money when you don't need to. It's extremely important to overcome investment inertia, just like you overcome any other form of inertia, like going to a doctor, doing your annual medical health checkup, and many other such things. In case you feel that it's not possible for you to do it yourself and you need an accountability coach, then maybe reach out to a financial advisor and let them work with you on updating your financial plan and ensuring that your investment strategy is current and aligned with your financial goals.
Disclaimers. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BUSL and certification from National Institute of Securities Markets, NISM, in no way guarantee performance of the intermediary or provide any assurance of returns to investors. The information is only for consumption by the client and such material should not be redistributed. The securities quoted are for illustration only and are not recommendatory. This material is for information and educational purposes only.